Good morning, everyone. Shaking with excitement, James. I'll try. I can't promise, but I mean, we do live in exciting times. I think that the changes facing us are so dramatic that you could probably talk about being in the middle of a game-changing era globally. In the middle of a game-changing era globally. As I look back as an economist over the last 10, 20, 30, 40 years, a familiar focus that I have, a familiar kind of issue that comes back to me is that every 20 years, factors come together to drive dramatic change. And those factors are usually technology. Those factors usually include significant innovation and new ideas that drive the business models of our organizations, and also population trends, social trends, the kind of things that people want, the way they want to do business, the kind of travel they have, the kind of aspiration they have around their living, as well as the pure numbers. And if you put those three together, technology, innovation and ideas, population, you gather insights as to what kind of change is happening. As an example, my proposition here is that every 20 years you have these dramatic waves of change. As an example, 20 years ago, what was happening? The wall was coming down in Berlin, the crash of the Soviet Union, socialist empire. And much of what was happening there was driven by technology. Young people in that part of the world were getting communications. They were wanting to have access to some of the benefits of the West. And there was that population movement which was driving their desire to achieve growth. 20 years before that, in the oil markets, oil-producing countries beginning to realize their source of strength, that they had oil, we all wanted oil, they could extract more value by pushing the price up, by optimizing their markets. And that drove it uncovered the poor state of productivity of Western industry. That drove dramatic restructuring in Western industry. That drove a fundamentally different approach to how we did business. Think about the 80s. Suddenly, business was no longer about being dominated by government decisions. It was about freedom. It was about markets. It was about liberalization. And that was a dramatic change which drove growth over the next 20 years, in the same way that the collapse of the Soviet Union created an entirely different context for growth over the next 20 years. So as we look for, I want to have that as the context, because we should not think that what we've just been through is this kind of slowdown that we're coming back out of. The States doing more effectively in many ways than us in Europe. As James was saying, we're kind of struggling to grow. We should realize that many of the game rules are changing. So when we look for growth options, we should be thinking, this conference for this couple of days is about how we find growth as organizations. And I think that the kind of issues that we should think about are, what are economic conditions in different parts of the world? What kind of foundations are they laying for us? What are the trends in our industry, and the kind of growth segments that we might be able to discover? And I think one of the issues for us here is the way in which the crane market, the lifting, the transportation market, is shifting globally. And it's shifting globally not simply numerically, but also in the kinds of products, the kinds of processes, the kinds of delivery systems, the kinds of ways in which markets expect you to connect with them. Those issues are fundamentally changing. First of all, global construction restructuring. Just a few years ago, the US was the dominant market for construction and for the crane industry. Already, China has taken that first place position. And over the next decade, into the next decade, up to 2025, that trend will continue. Actually, by the end of this decade, it's expected that the Asia-Pacific region will account for 52% of the total crane market. 52%. So Asia-Pacific, as an engine for growth, will be more than half the world's marketplace. The other issue that we've seen is the decline of Japan as a source of growth. Japan, over this next decade, will command rather less than half what they have traditionally provided in the past. A report recently out by the Oxford Economics suggests that overall, up to 2025, there is good news. And that good news is that compound growth will be about 6.5% per annum over that period. But clearly, with very diverse experiences in different parts of the world. And as I go through the presentation, I'd like to pick up on what some of those different issues will be as we go out over the next decade. But first of all, let me just focus on top topic for the global economy right now is what is the American economy going to do in terms of QE. QE, quantitative easing, essentially it's a modern version of printing money. The Fed buys its own bonds, and when it comes to pay for its own bonds, it says to the people it's buying those from, we'll put more money in your bank account. It's as simple as that. You know, there's a huge amount of money, and at the moment, the Fed is wandering about. So the Fed has been kind of pumping up the American economy and has been adding to liquidity. That's what QE does. And they've been doing it in great style, $85 billion a month for the last couple of years. So at present, the American system has put something like $3 trillion into the economy to keep it going. Now, you might hear on the radio, you might read in the news something about tapering, and you might think, and QE, and you might think, well, does this really matter? It matters hugely. It matters hugely. The trick that the American government needs to do is judge the time. If you think about it, that money being put into the system is to try and keep the economy going. And they have to judge the time as to when they think the economy is getting on its feet so they can start pulling out their support. If they do that too early, the economy will crash. Or if not crash, confidence will decline and the economy will slow down. And it will bring the rest of the Western economies with it. So the timing is a big deal. What has been the effect of QE, by the way, over the last couple of years? Well, as well as keeping growth up in the American system, it's also had a beneficial effect on the exchange rate. Putting a lot of money into the system brings down the interest rate in America. If the interest rate goes down, people are less keen to buy dollars. So the dollar exchange rate, compared with their main competitors, has been declining, has been a positive position over the last couple of years. So that was compared with the Chinese currency, that's compared with the euro, and also if you look at the British pound compared with the euro, the UK is also doing some of this QE. It's been beneficial in terms of the exchange rate. Now, what happens when QE gets reversed? Well, just let me stay on that chart first of all. If you think about it, if QE starts to get reversed, interest rates maybe start to edge up again, the dollar becomes attractive, people buy the dollar, the exchange rate goes up. You need to watch what's going on in terms of QE over this next 6 to 9 months. If you've got a cross-border exposure, if you're billing in one currency and receiving receipts in another, and one of those currencies is the dollar, you need to identify your exposure because there could be significant volatility over this period of time. The other issue is that growth could be reduced slightly. But you know, the good news, so here's reason one for getting excited. The good news is growth looks like it's coming back. America in particular, notwithstanding all those risks that I'm talking about, this year looks set to grow by 1.7, next year by 2.7. The EU will probably bottom this year or be zero, likely to grow next year. Germany likely to grow next year. Russia, quite a positive forecast. And China, no longer 9 or 10%, but certainly strong around 8% this year and next. So QE or not QE, that is the question that the Fed Reserve is asking. And the question that we should bear in mind is how might tapering affect our business? And we need to be alert to it. And in particular, you know, if we've got a currency exposure. Technology. I think that we should not underestimate the impact of technology. Innovation is a critical part. You know, every industry group, every business that I operate with is concerned with what kind of innovation do we need to adopt right now to drive our economy, to drive our markets. Innovation has always been important. It's critical to survive and grow in the future. And we need to take an approach which genuinely, I think, understands not just our customers, but all of our stakeholders. What's the impact we have on the environment? What's the impact that we have on employment? And I think that, you know, in my mind, the most modern businesses take seriously that social responsibility issue. And they take seriously the realization that we need to get a more balanced participation of people in the workforce. And I know that you're talking about gender representation, how to make the best use of women in the workforce in your markets. Innovation key. I think for the last decade we've been talking about green. I think for the next decade we'll need to talk about smart. I think we're only on the front edge of technological developments that are changing business models, changing the ways in which we interact with our customers. By 2020, just think about this, by 2020 we'll see 80 billion connected devices worldwide. There's only about 7 billion people in the world, so that's more than 1 to 10 that we'll have each. 9 billion mobile phones, most of those growing in the emerging markets, a large proportion being used in African economies where they're applying new applications that we just are not aware of. 5 billion internet users, 50% of whom connect through handheld devices. Now, one of the big issues that many businesses, and I know it's relevant to you as well, is the notion of big data. With so many people communicating in this digital age, we can collect that data. We can collect data on the performance of our equipment, the way in which our clients are using our equipment. We can grab that data, turn it into performance information, and sell it back to our customers in a way that can help them optimize how they use their equipment. There are inventive, innovative ways that we can actually make use of the reality that people will be connected on the move digitally, and that has to have a dramatic effect on the way in which we build our business models and the relationships with customers. So, you know, this is coming back for me. Dramatic change is not just about growth and about what the percentages are doing, but about how technology is driving the way in which we do things. And the question, I think, is how do we capitalize on these developments? Okay, so I'm whizzing through the world here, and I hope this is kind of making sense to you, and you can see its relevance to your markets. What does the globe look like in the next decade? Well, it's a multipole world. You know, for the last 10 years we've been talking about the BRICS as being the next kind of point of growth drivers. Well, clearly they are growing. They have been growing. They have become dominant in many ways. But the actual issue is we're looking at a world which is, in the future, genuinely interconnected, the states coming back to growth, reasserting your position, and we're looking at a multi-pole world with lots of different opportunities around that world. Think of this. In the future, 75% of the world's population in the next 15 years will become urbanized. So the future is about living in cities. And it's not just large cities. In China, we don't just talk about mega cities, we talk about megalopolises. In southeast China, in the area of Guangzhou, Guangdong, Shenzhen, the aspiration is to join these large cities together into a megalopolis, a large area of large urban centres employing the most advanced transport links, the most advanced built environment, the most advanced infrastructure. And that's an ambition over this next decade. That clearly has a great sense of opportunity for the kind of activities the crane, transport, handling, lifting industry can aspire to. We will be living in large cities. Large cities will be reconstructed, reinvested. And that's a trend that we need to make sure we get hold of. The other issue, of course, is that we've got to think beyond the bricks. We've got to think beyond the bricks, because in many ways we've established what the pattern of growth is and development in those countries. And we're even also almost seeing some kind of flattening out of the growth in China, in Russia, in Brazil. Beyond the bricks, there's a whole cluster of other countries who are also moving up the development path. And here's the clue. As you move up the development path, what do you need? You need infrastructure. You need more buildings. You need more opportunities to apply cranes into the market. One of the triggers for that is the growth of the middle classes. And over the next 15 years, middle classes will grow globally by up to about 5 billion, 2/3 of those being in Asia Pacific. So there's that continuing story, that Asia Pacific is going to be a very strong, is going to kind of take a large proportion of growth, GDP, market activity in the future. But you know, we shouldn't also miss what some of those other BRICS plus economies are. Middle East, Gulf. The Gulf went through a few problems recently, hit by the crisis, but economies like the UAE, which includes Dubai, have really got some strong ambitions around how they want to develop. Growth this year is coming back to 4 or 5% per annum. And you know, every Gulf state is aware that when oil runs out, what will they do? And are now developing strategic visions and plans to build diversified industries in advance of that, which includes infrastructure investment. For example, Qatar, over the next decade, is expected to grow by about 10% in infrastructure spend. UAE have got some big numbers that they're investing on things like rail track. By 2017, have an investment plan of $11 billion. They're building 7 new airports. They are spending $7 billion on Khalifa Port. They represent something like 50% of total investment in the whole Gulf region. The UAE quietly is investing oil revenues to build a diversified future. And there's huge demand there, potentially, for your kinds of products. And as an example, you know, if you take a UAE perspective, so we move out of Amsterdam here, we move out of Europe here, you know, you see that there's the UAE building what they see as their position as the center of a network hub globally. That's the roots of Emirates Airlines, that 10 years ago was quite a small airline. But now what we're seeing is that building that position of of a hub of tourism, holiday destinations, business destinations, and indigenous sustainable businesses in IT, energy, education, health, all that need construction, all that need, clearly, lifting capabilities. Another interesting country, Indonesia. Another report I read recently are putting China and Indonesia as the dragons of the crane and transportation industry of the next decade. Indonesia may surprise some of you. At the moment, how big are they? 16th largest economy globally, 45 million consumers, with 53%, just over half the population in cities. And there's a market opportunity there in Indonesia of about $500 billion. They're growing rapidly. By 2030, they're expected to be the 7th largest economy in the world. 135 million members of the consuming class. Two things are going on for Indonesia: population growth and population development. Huge number of middle-class people growing within Indonesia. So not only is it a populous country, it's one that's becoming prosperous. There's a huge growth of consumer activity and agriculture and fisheries, lots of mining resources. In many sectors, we're looking at 7-8% growth. And what goes hand in hand with that is infrastructure spend. They need to build things. And in order to build things, they need your equipment to move things and to lift things. So my point is that economically, as we look out at the world, to understand our opportunities, first of all, is to realise the world is fundamentally restructuring. Another aspect is to understand at what rate are different countries recovering from the crisis and how successfully are they doing that? What does that mean to construction and cranes? And then what's this, there's this big line of developing economies coming on stream. And let's not just focus just on the front end, but the other ones that are coming along rapidly and getting to this position where they need your products. Because construction and crane industry is the first into recession, is the first out. And you are early in the growth phase of a developing economy. In terms of demand, you're early in the growth phase of developing economies. So there we are. We're in transition, this multi-pole world. And first mover opportunities only come once. And I think that right now is a perfect time to be spotting the first mover opportunities in some of those emerging, growing, developing economies where they're moving through the development process and they need your products. And I genuinely think that the question is what and how do we need and how can we innovate to capture greater value in those economies in 2014. I think we are just coming out of the real tough time, and there are really great opportunities ahead of us. And the final comments I'd quite like to make really are just maybe a little bit more specifics around headline numbers. Because if we take a long-term view, we do actually see that America has great potential for growing, maybe at 1.5% per annum in real terms. There's a population growth, and there's a shortage of supply of housing. So housing, property generally, especially high-rise, could provide a lot of demand for construction over the next decade or 15 years. European Union, I think, will be rather slower than that. Some reports say that by 2020, 2025, the European Union could be 5% smaller as a construction industry than we are now. I'm not sure I'm that negative, but certainly with the overhang of public debt and slow growth, there are real struggles. I think the hot spots, the points of optimism in the European Union are Germany and the UK. Germany and the UK, who by 2020 are likely to have construction markets, construction markets in excess of $300 billion between them. I think really interesting countries, India, who are now beginning to demonstrate that growth and investment in infrastructure, which we're hearing about as part of this conference, maybe between 6 and 10% growth over the near term. And we must also remember sub-Saharan Africa. Sub-Saharan Africa, places like Gambia, places like Nigeria, places like Kenya, countries like Kenya, are really assertively on the growth path, and huge opportunities in mining and quarrying and construction, which have knock-on positive benefits for your industry. In many ways, I would say if there's one country, one region you need to go away and really research, I would say it's sub-Saharan Africa as representing a massive opportunity over the coming years. And that brings me to a close, really. I hope you've followed my witterings. Short term, there are some challenges and some opportunities, but really if we take that long-term perspective, there are some massive changes that we can take hold of if we really work innovatively and take hold of those in a dynamic kind of way. Thank you.